Wow, what a crazy month we just had in the markets. A tough one for trend followers and fundamental investors alike. There were two huge factors that affected the markets in October: the bounce back to a rise in inflation and the Israel war with Hamas. How did your portfolio fare and how are you feeling about all the chaos that's happened? Are you a bit nervous or are you cool, calm, and collected like us, even when our portfolio sees a bit of drawdown? So, welcome to this month's update where we chronicle the life of a real money stocks portfolio for the end of October 2023. As you probably know by now, this is where we put it all out there, warts and all, so you can see exactly what investing using a trend following swing trading systemized process is all about and why it works long term. We run this portfolio in real time with real money, so there's nowhere to hide. And speaking of that, our portfolio was down 5.29% in October. We're not magicians and we don't have a crystal ball to know the future, so our portfolios aren't immune to periods of market turmoil, and we see losses at times too. But we're not freaking out about it and we're not throwing in the towel. Here's why. You see, as a trader or investor, you can't control the future and you can't predict exactly what the market will do. So you've got to accept that not all trades are going to be big winners, and you need a mindset and a process to ride out the storms with confidence until you see calm waters and smooth sailing again. So you might be sitting there thinking, Shane, how am I meant to do that in the heat of the moment when the pressure is on and there's all this news bombarding me? Well, you may have seen some of our previous videos that we've put out to showcase some of the trades that we've bought into and then we've sold based upon our unique buy-sell algorithm. It trades with a statistical mathematical edge behind it. Yes, it has both winning trades and losing trades, but overall, having a process with a statistical edge is all about making sure that your winning trades are much larger than your losing trades, and also that it's something that's repeatable time and time again. Now, while we do these updates monthly and show you the performance in real time, it's the big picture that's most important. When investing, you're going to see positive months and you're going to see negative months. As those winning trades and losing trades, they all play out. However, you're not just investing for a month or two, are you? You're investing for a lifetime, or at the very least, well into your retirement years. So it's not 1 month's performance or even 1 year's performance that'll make or break your portfolio. It's the culmination of all these months, years, and decades all put together that helps you achieve your long-term investing goals. Last year, for instance, the financial year 22-23, our real money portfolio gained 15.32%. That was a great effort in a year where interest rates were soaring and people were backing away from the market. Our process and its statistical edge kept us confident in our beliefs about the market, giving us the mental edge to keep trading in adverse conditions and block out all the noise. Being successful in the market is all about winning the psychological game. It's what's between your two ears and how you react to the different curveballs that the market throws at you to determine whether you'll come out on top or whether you end up as just another market victim. Mark Douglas, probably the world's best trading psychology coach, says in his book, Trading in the Zone, the defining characteristics that separates the consistent winners from everybody else is the winners have attained a mindset, a unique set of attitudes that allows them to remain disciplined, focused, and above all, confident in spite of the adverse conditions. No portfolio will ever go up in a perfect straight line, and nor should you expect it to. Whatever investing strategy you follow, you want it to be able to ride out the inevitable short-term volatility and beat the market over the long term. During those tougher times, as Mark says, you've got to remain disciplined, focused, and confident in spite of the adverse conditions to end up a winner. So if we go back and look at the last 5 financial years, we can see that the portfolio has grown 89.66% or 13.64% per annum. The market, the ASX 200 Accumulation Index, which tracks the performance of the largest 200 companies on the ASX and also includes their dividends, has only grown 40.65% or 7.05% per annum over those same 5 years. There have been plenty of bumps along the way, including the market pullback during COVID, where the market fell 35% and our portfolio got out. But overall, after all the ups and downs, the positive and negative news, wars, floods, fires, changes in government, the changes in government policies, and a virus that shut down most of the world for a couple of years, we've remained vigilant. We've stuck to our process and we've grown our portfolio 89.66% and achieved an average of 13.64% per annum over the last 5 years. And we've done it with just 15 minutes a week of effort. Since taking our first trade at the start of 2016, starting with $80,000 right up until the 31st of October, our real money ASX portfolio has grown 125.85%. From $80,000, it's now worth $180,683. The market, on the other hand, has only grown about 75% in total over that time. A few extra percent per year of outperformance has equated to tens of thousands of dollars more in our account in just under 8 years. And if we fast forward and look at the difference, if things were to stay on the same trajectory over a 20-year period, the gap gets wider and wider. A portfolio following the market in, say, an index ETF or an average balance managed fund would help you grow an $80,000 portfolio to $337,308 over 20 years, which would seem pretty good, right? But just doing a few percent more per year using a process like ours or some other that uses timing to gain a statistical edge and then executing it with the right mindset to gain a mental edge would see the same amount of money grow to a whopping $639,199. That's almost double the growth. Now, of course, you've got to take taxes out of that and any other costs, but you can see why we're such big advocates of people taking control of their own destiny by learning the right skills and having the right mindset to be successful in the market for a lifetime. When you get the process and mindset right, it's a much more enjoyable and peaceful journey to hitting your investing targets and getting you where you want to go faster. Your bank balance and your stress meter are much happier along the way too. And of course, that's what we all want, don't we? So if you want to keep up to date with all the new positions that we've bought or sold off and learn all the ins and outs of trading the stock market with a system, then subscribe to the channel and tap the bell to get notifications for all the latest. As always, this video is for educational purposes only and shouldn't be taken as specific advice to buy, hold or sell any position in the market, and that past performance is not an indication of future performance. Until next time, where I look forward to showing you around the markets again, I wish you consistent and objective investing. Bye for now.